right. Well, thanks for joining the show. Um, you and your partner, Julie Lamb, Annie Dickerson here on the Capital Raiser Show. We're excited to broadcast. This is one of our first shows, broadcasting out of my spare bedroom. And Annie, I met her through the Multifamily Investor Nation Summit, and I reached out to her to see if she would join us. And she is with Good Egg Investments. And we'll let the audience know how to get a hold of her towards the end. But Annie, we want to find out a little bit about your background. And you're specifically focused on raising capital yourself, is that right?
Yes, that's right. So Julie and I teamed up a little over a year ago, and we launched Good Egg Investments really because we saw this gap out there. We saw a lot of people who knew about rentals and how to be a landlord, but they didn't know much beyond that. And we had learned about this whole thing called passive investing, where we could put our money into these syndications, as you know, and not have to deal with being a landlord, but get all the benefits of investing in real estate. So we really launched Good Egg Investments to help spread the word about what these opportunities are all about. And then as people became interested in these opportunities, then we started to connect people with these different investments.
So, how did you meet your partner? Have you been in business with her before?
No, we, believe it or not, we met at a real estate investing conference. As you may know, there are not a lot of women at these things. And so it was not hard to find each other, especially both of us being Asian women. And so at that conference, we talked about our mutual experiences in starting to raise capital, starting to raise awareness about passive investing, talking to other moms, which was the target audience we both wanted to serve, helping moms to create passive income for their families. And so we really just had a great conversation at that conference. And then after that, we fell out of touch for a month or so. And then one day we're like, hey, you want to meet up just to grab coffee and to catch up. And I remember so distinctly, we were sitting across the table from each other. And at this point, we hadn't talked about a partnership at all. We were really just going to create our own separate businesses. And so she looked across the table at me and she said, "So, what is it you really like about this business?" And I said, "Oh my gosh, if I could just create content all day, blog posts and videos and educating people, I would be in heaven. If I could take one thing off of my calendar, it would be meeting up with investors, answering investor questions, all of that stuff." And she said, "Are you kidding me? I love that part." She said, "I sit in front of a blank page knowing I'm supposed to write a blog post, but I don't know what to write." And so it was at that moment we looked at each other and we thought, so you're good at that and I'm good at this, and we're both trying to help the same people. So that was really the moment when the seeds of the partnership were planted, and then Good Egg grew out of that.
Nice. So, tell me about the track record that you guys have been able to accomplish since you guys started working together.
Yeah. We've been busy. We've been busy. We did not anticipate it being such a busy year, but we really took the time and effort to create really strong partnerships. And that has really fueled our growth. So over the last, it's been about a year and a half. We've done almost 20 deals at this point, mostly in large scale multifamily, and mostly in Texas and the Southeast. So at this point, we've co-syndicated over $400 million in real estate assets and over 4,000 multifamily units.
And how much of the capital raise did you have to do yourself?
Yeah. So at first, we were bringing smaller amounts to the table as we were growing our investor base. And so for each deal, we would bring, between say 500,000 and $1 million. And bringing in, 10, 20 investors. And as our investor base grew, as we were able to reach more people, as our investors, our happy investors, were referring us to their friends and family, we saw a lot of organic growth. And so now when we open up a deal to our investors, we often see a rush of investors coming to get into the deal.
So Annie, you didn't know anything about multifamily. So who did you end up partnering with and who did you lean on in order to acquire this portfolio of property?
Yeah.
That's $400 million. That's insane. And
Yeah.
you started recently, right?
Mm-hmm. Yeah, I'll dive a little bit further into my background because this whole real estate thing for me came out of left field. It wasn't something I was seeking out. What happened was my husband and I have been investing in small multifamily for about 10 years, but just real laid back, real slowly. We didn't really have lots of spreadsheets or a whole team built out. We started out house hacking. We'd buy a duplex, we'd live in one unit and rent out the other. And we did that a few times. And now that we live in the San Francisco Bay Area, where it's pretty insane to continue to buy and acquire more properties, we decided to invest out of state. So a couple years ago, we started investing in Huntsville, Alabama, which was the market I had identified that would fit our investing goals. And so we quickly amassed a small portfolio of about 25 units in Huntsville. And so that was going great. I thought, okay, well, let's just keep doing this. But then, as you might know, being a landlord isn't always easy. And so things started going wrong. We had some theft issues. We had some tenant vandalism issues, things that we had never dealt with before. And so that's when we started to dig further. And that's when we discovered this whole passive investing side and this whole syndication thing, and started going down that path and helping people to invest passively alongside us.
Okay, well, that still sounds crazy, and I'm totally in the dark about you were investing with yourself, and then just organically through the connections that you had, you started
Yes.
partnering with people that were
Right.
syndicators.
Right. So yeah. So basically how that happened was once I got it in my head that I wanted to do a syndication, and originally I wanted to do a syndication of my own. I wanted to do everything. I wanted to do not only the capital raising, but I also wanted to do the acquisition and the underwriting and the asset management. I really thought I was going to do it all. So I said, okay, well, to get from point A, which is where I am right now, having very limited multifamily experience, to point B, where I can do all of these things, I really need to find a mentor or invest in some sort of education or training program to get me from here to there in a short amount of time. So that's what I did. I invested in conferences and some training programs, mentors, coaches. And I really put a lot into the education on the front end. And through those connections that I made, people would refer me to other people. And, at conferences, I would meet people. I mean, those partnerships it takes some time, but I was able to build up many of those partnerships through those networking opportunities.
So did you team up with a group that was already syndicating, or did you find like somebody to do the underwriting and another person to help with the vision of the property and the repositioning and the construction side of it?
Right.
Who
Right.
are who's on your team right now, and are you doing the same deals with all of those people, or are you still kind of going from team member to team member depending on the deal?
Yeah. Yeah. So for most of our deals, we are partnering with people who have a team in place. So they're the ones who are, orchestrating the property management and the lenders and the brokers. And so they're sort of spearheading all of that. And we're really coming in to help Sometimes we'll help structure the deal, sometimes we'll help with due diligence, but our main role is in helping to raise the capital.
Okay, fantastic. That sounds like you're crushing it. So I'm so excited to have you on the show. Now, in regards to what you're doing for raising capital, what have been some of your best practices so far to raise money? I know that you guys have a certain system in place, but just from your personal experience, what have you done?
Oh, yeah, so many things. Oh my gosh. And we've done so much trial and error. We've been very fortunate to have all these different opportunities, almost 20 deals over the last year. So we've been able to try a lot of different things, right? If you only have one deal, then you put your head down and you think, okay, what's the best way to format this email or structure this form or make this funnel? And you only have one shot at it. But we had almost 20 different tries where each time we were like, okay, maybe let's try this form this way. Or, oh, okay, that didn't quite work. Maybe let's tweak it, or maybe let's put this on this web page, or, so we tried a lot of different things. And I think at the end of the day, what we've found is that a big part of what we do and what investors are looking for is very clear and approachable educational materials. So much of real estate syndication is jargon and graphs and complicated stats to understand. And I think a lot of investors, they just want to know the basics. And I think that's one thing that we've really excelled at is we've been able to break down this black box of passive investing into easy to understand terms and anecdotes and stories so that anybody even with no real estate experience can come to us and they feel welcome, they feel like they can find their place. And so we do that through blog posts, we do that through videos, we have a weekly newsletter that goes out. And so we're always staying in touch with people. That's another important point is when you're raising capital, it's so much about that trust, building that trust with your investors. And building trust means that you are staying top of mind with them and you are keeping them in the loop on what you're doing, even if you don't have a deal. And I think a lot of people ask me that. They say, well, what am I supposed to tell people if I don't have a deal right now, or I don't have an opportunity for them? And I say, well, tell them that. Tell them that you are out there working hard, pounding the pavement. You've met with 10 different people and you ran the numbers and none of their deals penciled, but you are looking hard for a deal. That will get your investors on your side. They'll say, oh my gosh, I can't believe this person is working so hard on my behalf to find a good opportunity for me. So I know when they find that opportunity and they send it to me, that it's going to be a golden opportunity because they've been looking so hard. So, things like that, like keep your investors in the loop and make sure that they are primed and ready. They have all their questions answered so that by that time, by that moment that you send out that email to let them know a new opportunity is available, they are ready. They've got their money ready. They know exactly what the process is, and they can just click and get into the deal. So I would say that we have put a lot of time and effort into the education leading up to the actual investment.
So, in regards to that, are you finding the majority of your new investors through technology, through blog posts, through social media, or do you spend some time actually just calling people on the phone that are in your personal network? What do you say? What's the percentages?
Yeah, it's a good question. I would say it's a little of everything. We started out mostly with friends and family, and I still remember in those early days, I would record these videos for them and email them to them. So I'd say, hi, Ruben, I know it's been a long time since we've talked, but I wanted to catch you up on what I'm up to. And so I would send these personalized videos out to people, and then people would reach back out and we'd have a conversation. And it was time consuming, but I was able to build those relationships one by one. And flash forward to today, we have, all these blog posts and videos, podcasts out there, our online courses, our newsletter. So we have all these materials out there. And now, by the time that an investor comes to us, we're not spending hours answering their questions because they've already had their questions answered. We hop on the phone with them, and sometimes, in as little as 15 minutes, they're like, "Okay, I'm ready. I'm ready to invest. When's your next deal? Where do I send the check?" So these days, I think two of our biggest drivers of new investors are podcasts and word of mouth referrals.
So those videos that you were sending, are you still sending those videos to people, to new people, or to even your old days?
No, no. So we're not sending those out to new investors, but we do hop on the phone with every investor and have a conversation.
Did you find that doing the videos was an easier form of spreading your message to the people that you knew, or better said, was it really scary to call them, or why the videos in that case?
Yeah, it just comes down to each person's style, I think, and for me, I really wanted that personal connection with not just my voice, but I wanted to let them see me. I guess I couldn't see them, but let them see me. And so I thought it was added some personal touch, and I had fun with it. I used to have this little dry erase board, and I'd write their name on it, and I'd pop up on the screen and say hi. So I had fun with it. And I think another reason is, over the years, I've lost touch with a lot of people in my network and only had their emails. I didn't have their phone numbers. And so for those people, I didn't want to just send a text email. I thought that was too impersonal and people could just skip over that. So I wanted to make it a little bit special.
And then how would you send those? Just via from your phone or some email?
Yeah, so at that time I was using a tool called BombBomb, and BombBomb allows you to record quick videos and embed them as a GIF, actually, right inside your email.
So this was just a year or two ago that you were sending these videos out, or is this way back when you were doing
Yeah,
it?
this was about a year and a half ago when we first started. I was sending out these videos one by one.
You evolved quite a bit since then. And
Yeah.
what is your current strategy right now? I know I really want to talk about the good investments and what you're doing and how you can share that program with people that are looking to raise capital yourself. But are those the majority of the tools that you're using right now, what you do through good egg investments to get new people?
Yeah, I would say, yeah, we love podcasts because, real estate syndication is such a hard thing to wrap your mind around if you have no experience in it, right? Explain it to people like it's a group investment, and they're like, oh, okay, so is it like a REIT? How does it work? Do I have an online portal I log into? So they have all these questions. And, I mentioned earlier that trust is a big factor too. So podcasts are a great way for us to sort of have that personal connection with investors. And then another way that I haven't mentioned yet is we are part of a number of Facebook groups. And, I mentioned our target audience are moms and other families looking to build passive income so that they can spend more time with their kids and travel the world. And so we're part of a number of moms groups on Facebook. And sometimes Julie and I will just go in and we're not advertising our deals or anything like that, but what we're doing is we're looking at the threads maybe related to things like, say, saving money for college. And everybody's talking about the 529 plan, right? And, they're talking about the pros and cons of that. And then we come in and we say, well, the 529 plan might work for some people, but here's what I do. And here's why I think it might be a better approach. So we'll just go in and just add value where we can without really expecting anything in return. And we've gotten a lot of great conversations and great leads out of that strategy as well.
Okay, so let's get into the good egg investments. What can you tell us about the programs that you have or what you can do to help people raise capital themselves?
Yeah, yeah. So we have a new program, actually. It's called Capital Raiser Academy. And Capital Raiser Academy was really created exactly for people who want to raise capital. So either you might have done some passive investing and you're like, oh my gosh, I've been telling all my friends and family about this and referring them over to the sponsors. And well, I want to be part of the active side of the general partnership too. I want to have a bigger role. So that's it's a great program for those people, or for people like us who may have been raising capital for a little while, but maybe you've hit a ceiling. Maybe you're like, oh, I just can't get past this number. I don't know why I can't raise more. And often it's a matter of building in the right systems to get past that point. And then there's also the people who have been doing small multifamily for a while and maybe want to scale up to do bigger deals. And in order to do bigger deals, you've got to be able to bring the money to the table. So a lot of people actually, I think they fall into the trap of focusing on finding the deal first. And they do all the underwriting, they get it under contract, and now they've got 30 days to close. And they're like, okay, got 30 days to raise $1 million. Okay, who can I call? And then at that point, it's too late, because people can smell the desperation, right? And so they don't want to invest in your first deal that you're pitching. They want to let it sit with them for a while. They want to think about it, they want to ask questions. And so that's why Capital Raiser Academy is really it's great for helping you build up your investor base. And so basically what we do in the program is we really open up our entire business to show you exactly how we do everything. And this was a big thing that I found was missing from some of those other programs I mentioned I had invested in early on. Was a lot of them would teach high level things, high level theory and concepts, and they'd give examples of deals. Um, but I found that they were sometimes thin on the capital raising piece, and especially on the exact, like word for word, like what do you actually write in an email to an investor? Like when you have a new deal, how do you phrase a new deal? What do you put in the subject line? What do you include in that email? And then what does that funnel look like to get an investor from knowing nothing about passive investing to investing in multiple deals with you? And so those are all things that we share in the program, with the goal of getting somebody from, not being able to raise very much, if any at all, to being able to have a fully sustaining independent business raising capital.
Okay, so that leads me to a question that I'm very curious about. Now, when somebody is raising capital, let's say that they learn how to do it themselves or figure it out through trial and error or go through your program, then they start getting their network. And how is it that once they have capital or even before, how do they, because you said become active investors and part of the GP?
Mm-hmm.
When they do that, what would you suggest that they approach a multifamily syndicator with in order to raise capital for them? And let's talk about that before we go into the legalities of how they get paid.
Yeah. Yeah. I mean, there's no cut and dry path, right? Because when you're new, it's hard. It's hard because you don't have a track record. And so that's part of why we put together this program, so that people can leverage us and our relationships, and we can connect people with sponsor partners that we know. And we can say, hey, this person has gone through our program. They are capable of raising this amount. They have all these great investors in their database now. And we can sort of, recommend them. So help them get to the front of that line, so to speak. But it can be hard. I've been to many multifamily conferences where, there's the people looking for capital and there's the people looking for deals. And it's a dance of, who's going to be a good partner? How can I find the right fit? So it takes a lot of time and effort, and unfortunately there's not a clear path.
So what I want to know is if I raise capital for you, for example, you hook me up with some of your sponsors, the people that, the team, the people that have the underwriters, the brokers,
Mm-hmm.
the construction crew, the vision people, I mean, the whole team, you hook them up with them. And then based off of how much capital they think that they can raise, how do you structure? I mean, because I'm this particular boat myself. So how do you figure out exactly what percentage of the GP that you get?
Yeah.
Because once you say I'm able to raise $1 million, for example. If you raise more than that, you can't get paid more in terms of financially or in terms of percentage of the company.
Right.
So talk a little bit about that.
Yeah, I know. It's a tricky area to navigate legally. And a big part of what we do is we always make sure that we are not just raising capital, that we always have a bigger role in the GP. And that's always what we tell people is don't just be bringing money to the table, because then you're a broker dealer. And so what you want to do is, negotiate the partnership such that you have other responsibilities in the deal, whether you are doing due diligence or you are doing the paperwork, the admin work, helping with investor PPMs or things like that. Whatever you can do, the more you can do, the better, to show that you have an active responsibility in and some active control in the deal, which is really what the SEC wants to see, is that you are being an active steward of your investors' capital. And so as for the exact structure, it varies from deal to deal, but you're right. You can't be compensated more or less, based on the exact amount you bring. So that really comes down to the negotiations that you have with each individual sponsor.
Yeah, and then another area is like, let's say I raise a bunch of money for the groups that I'm interested in working with. Like Bakerson, for example, is the main group that I'm involved with. If I get 5% of the company as a GP or whatever percentage we negotiate, and then over I do more than what I say I originally was going to do. Like, let's say instead of raising $1 million, I raised enough for the whole deal. Then obviously I can't get paid more that way, but perhaps I can take a bigger chunk of the next deal or something like that. Do you
Right.
find that
Yeah.
happening with some people?
Yeah, that's absolutely a path you can take. You can also, you can make the call as the capital raiser. If you're aiming for 10 investors, but you get 50 investors, what do you do with those extra 40 investors? Maybe there's room in the deal for them, maybe not. Maybe you decide, I'm going to save these investors for the next deal, so that I get compensated more fairly. So I think as a capital raiser, you do have a little bit of leeway there. And so sometimes we will just tell our investors, this deal is full, because we've only allocated so much. And so we really train our investors on our process so that when that deal comes out, they know that if they are interested, they need to really get in and put in we call it a soft reserve. So put in their soft reserve as soon as possible to save their spot.
So the other thing that I'm curious about is with good egg investments, once they start raising money and investing with your deal, is it Is it specifically targeted towards multifamily and working with your sponsors, or can they take your program and go to different sponsors or use that program to learn to raise money for something else, like either a business startup or fix and flip properties, for example?
That's a good question. So, and I assume you're talking about Capital Raiser Academy.
Yes.
Okay. Yes. So with Capital Raiser Academy, it is based on the multifamily deals that we have done. So we'll show you exactly the emails that we send out, the call scripts that we use with our investors, the funnels that we've built up, all of that stuff. But it is specific to multifamily. But, of course, you could take the bones of that and adapt it to something else. I mean, we're not doing anything magic here. We're basically, using funnels and emails and staying um, on top of people's minds so that they can build that trust with us. And theoretically, that's easy to understand, but in practice, it's hard to carry out because it's a lot of work to write all those emails, create those blog posts and those videos and that content. And so we really give that to you. And another part is, we give you one blog post a week that you can copy and paste right onto your website. So you start to build that educational foundation for your investors.
Amazing. Okay. So why did you choose specifically multifamily? Are there certain things about that asset class that you find superior to other investments?
Yeah. Yeah, I love this question. So, multifamily, we love multifamily, and more importantly, our investors love multifamily. You know, I think Julie and I got into this because we wanted to help other families to build passive income so that they could spend more time with their kids. And a lot of those families know nothing about real estate when we start working with them. They've either never invested before, or maybe they have a rental property or two, or they have stock market experience, but they don't have much real estate experience. And to take somebody from having very little real estate experience to investing in, say, industrial or warehouse, that's a big learning curve because people don't understand, how does that work? But apartments, who hasn't lived in an apartment before, right? And so it's a lot easier of an entryway for many of our target investors to really wrap their minds around and to understand, oh, okay, I get it, because tenants pay their rent and we collect that rent and then we can invest it back into their property, things like that. So they can start to understand. And then also, we like multifamily, especially in growing markets, because it tends to be more recession resistant, especially for the B and C class multifamily that we like to invest in. And, I think another big point is that we love not only to help our investors, but we also like to make an impact in these communities. And what better way than to update and renovate these properties, and to really make the residents really proud to live there and give them a safe and clean environment to raise their families in. So I think multifamily for us is really a win-win-win for everyone.
I really appreciate, because we have the same philosophy at Bakerson, that you called them residents, not tenants or
Mm.
occupants. They're like real people, right? That like
Mhm.
actually help you make money, so you got to take care of them. And the
Exactly.
first step is to respect them. So that's awesome. You know what? I saw you on the summit, the Multifamily Investor Nation Summit, and you kind of broke down this triangle where, in order to raise capital, or one of the keys or some of the keys to raising capital was, one, to connect, two, to create value, and three, to be consistent. What can you say about that specific triangle or that system for people that are looking to raise money?
Yeah, I'm so glad you brought that up. Yeah. So those are the three keys to getting off to a fast start with raising capital. And we picked those out because those are really the cornerstones of our business. is, you have to find a way to connect with people, whether that's through, those early bomb videos I was sending, or through the Facebook, um, threads that we're adding value to, or the blog posts and the videos that we're creating. But you have to find some way to connect with people, and not only to connect with them, but you have to create value. So you have to, focus not on you, but you focus on them and what they need and what their pain points are. And that has been a big part of our philosophy is, even if they don't invest with us, we just want to reach out authentically to people, and we want to help them wherever they are. Maybe down the road they invest with us, maybe not, but we just want to let people know that we're there for them and that we can help them if they need it. And then the last one is, stay consistent. And that's the one I think that most people fall short on. Is it's easy to get excited about starting a business or raising capital, and you put in all this work up front, and you maybe on day one, you're like, I'm going to call 20 people a day, and you do really great on day one. And then day two, you're like, yeah, okay, that didn't work. So, okay, so maybe today I'll call 5 people, and then it fizzles out over time. But what you need to do in order to see success in raising capital is you really have to be consistent, because that shows your investors that you are trustworthy. You're not just telling them, hey, trust me, but you are showing them. And so one thing that we do is, we consistently put out a newsletter every single week since we started, with all the latest goings on in our company, the deals that we're doing, what we're up to, all of that stuff, so that everybody can stay in the loop with us and know that we're not going anywhere, that we're still here, that we can stay top of mind with people. So so connect, create value, and be consistent.
It's scary a little bit, doing the social media for Bakerson and my own social media with that in mind, to be consistent, because I know I have to be there almost every day, and I have to provide content, and I don't know what I'm going to come up with, and I have to be creative, and it like takes energy, but it's fun because I know what the end result is, and I know that I get to help people. But with the be consistent part, is there anything that you recommend, or any best practices, or any coaches, or what would you say for someone who's just like, that sounds, theoretically I understand being consistent, but I just don't have the time to do it.
Yeah.
I don't have the mindset. I don't have what it takes, but that they want to succeed, but there's just like too much work for them. What can they do? Do you have any best practices for them?
Yeah. Oh man. So one thing that I do is I will schedule everything into my calendar. Anything that I want to do that I need to get done, it goes on my calendar. I don't leave my calendar up to chance. And so that newsletter, I block off time for that newsletter every week. Blog posts, I block time off. So I know, okay, this time is sacred, and this time I have to put my head down and work on this because I've committed to that. And it's so much easier being consistent with your future self, right, than with your current self, because your current self, you're always procrastinating. You're like, oh, maybe I'll get a coffee first, or maybe I'll hit, respond to these emails first. But your future self, it's easy to be consistent with your future self. You're like, oh, future self is going to do X, Y, and Z every day, no problem. So that's what I say is, plan that time then for future self. Think of, your next week, and plan out ideally what you want your future self to do. And then when that time comes, your calendar is already organized. You know that you've put that planning time in, and you've decided that those are the most critical pieces that you need to get done to move your business forward and to reach out to your investors. So then at that time, you don't have to waste time continuing to think about, okay, what do I need to do to be consistent? Okay, I should do this today, that tomorrow. You've already done that part, which is the hard part. So now you just put your head down and you trust that your calendar will lead you to where you want to go.
So you don't let yourself budge when you have a specific time of day that's dedicated to your blog post, what happens when people start messaging you or calling you? Is it easy to get
Mm.
off track? And do you just turn off everything and then focus on it and say, nobody's going to penetrate this time for me because it's sacred and I know I have to do it?
Yeah, I turn it all off. I only check my emails like once a day. I think there's this great quote about, your inbox is really just everyone else's to-do list for you. And I don't need that to-do list. I don't need that common reminder a constant reminder that, I'm behind and I need to get this to this person, this to that person. It's a distraction. And so I will set aside a specific time each day to get to all those items, but I'm not checking my inbox every 20 minutes. And when I'm focused, I'm heads down. I've got my phone is set on airplane mode and I'm focused because I know if I don't get this blog post out today, I'm not going to have time the rest of the week to do it because I've already planned out the rest of my week. And if I don't get this blog post out, that means that investors aren't getting educated on this really important subject matter. And if they don't get educated on this piece, they might not invest with us. And so it's really a matter of just knowing your why and then backing that up into what you're doing moment to moment.
So those non-negotiable times, because and I wanted to ask you because you said that you're married. I recently got married, and a lot of times I'll be like, geeking out on social media, making my posts, and I'll be in the middle of editing a video that I'm going to be posting, that I want to get out by a specific time, and then boom, all of a sudden, wife comes up and wants to cuddle, and I'm just like, like you don't want to drive them away because you love them, but at the same time, you're busy. So how do you
Right.
handle that with your personal?
Yeah. Yeah. And I work from home just like you do. And so, often that my kids aren't here right now, but often they're here. My mom is with them. And so, it is hard. But I will sometimes, if I really need to be heads down, I'll close my office door and I'll put a sign on the door and say, I'm busy with X, Y, and Z. And sometimes I'll put a sign outside my front door so that the UPS man doesn't come and knock. And so it's just a matter of those little things, I think, just letting people know that you want to spend that time with them and you do want to be there with them. And that's exactly why you're doing what you're doing. I tell my kids all the time, I'm like, I want to spend so much time with you. I want to travel the world with you. I want to be, I want to do all those things with you. But in order to do that, I have to close my office door right now and I have to get this blog post or this video done right now so that I can build my business and so that we can have the money to go and do those things.
Yeah, that discipline side of it is so important. I'm still struggling with it. But I want to give you the chance to talk about your blog, not your blog. You're going to be doing a podcast coming up. Tell me what it's about and what your target audience is, what you're going to be doing.
Yeah, yeah. Julie and I have been talking about doing our own podcast for a while, and we just couldn't settle on exactly what we wanted to do it on. We thought, well, real estate investing or, syndications or passive investing, we even thought, maybe a show about teaching kids how to invest. We thought about all these different things. And then we went back to our conversations with our investors, that connect piece. And we really thought about, okay, what are their pain points? What are they struggling with? And we are creating a podcast around that. And it's called the #Life by Design podcast. And basically, what we've realized is that when people come to us and we say, what are your investing goals? What do you want out of life? A lot of people say, you know what? That's a good question. I haven't really thought about that. And we say, oh, well, maybe let's start there. Before you invest in a syndication with us, maybe let's start there. What does your ideal lifestyle look like? If you didn't have to worry about money, if you didn't have to work at your job, what would you do with your time? And it's surprising how much people struggle with that question.
Mhm.
And so the #Life by Design podcast will really be about interviewing and inspiring people with these stories. So we plan to bring on people who are doing it. They are living a life by design. Whether that means, they've quit their job and they're pursuing their passion project, or they're traveling the world with their kids, or even if they're just hunkering down, staying at home, watching TV, whatever that looks like for them, but they have created that lifestyle and have that freedom and flexibility. So, we want to highlight those stories, tell those stories, and help inspire people to get on that journey to figure out what they want for themselves as well.
Awesome. Yeah. So when people want to get a hold of you, how do they do that? And what is the best way?
Yeah, absolutely. I always love hearing from people. If you want to learn more about Good Egg Investments, of course, you can go to goodegginvestments.com, or you can reach out to me anytime at Annie@goodegginvestments.com.
Amazing. Okay, I'll make sure and put your logo in the video too, and give people an opportunity to connect with you. Thank you so much for joining me on the show. I hope that sometime we run into each other at a real estate conference. I'm sure you probably go to some national ones. I'm trying to get on the circuit myself just to go and see Michael Blanc's event, or Joe Fairless up in Denver's coming up. I know that there's the Jake and Gino's event, the multifamily mastery out in Florida, and these are all coming up. Even somebody that does a hedge fund symposium is going to be coming up here, Joel Block's event in Las Vegas. But anyways, thank you so much for connecting with me, and I loved hearing your story. I really appreciate you coming on this show, and I definitely plan to stay in touch with you. Thank you so much.
Absolutely. Thanks for having me.
All right, take care.